If you look at global energy and data use, data centers, which is what we're classified as, uses 2 to 3% of the energy globally. So big energy bucket, 2 to 3% is used for data centers. Of that, Bitcoin mining is only 0.27%. And it's the only industry that can literally shut down in 15 minutes and return power to the grid.
And so I think the energy consumption that Bitcoin represents is a really good thing, because we want more energy consumers to behave like Bitcoin miners. We want flexibility on the energy system, that is super flexible like miners, but everybody to, all the different consumers to be able to have their own levers to pull, when the grid needs it, but also to be able to consume energy when, there's excess available.
What's up, Sats fans? Welcome to Swan Signal. We got another great episode for you guys lined up today. My name is Sam Callahan. I am your host. I'm the lead analyst at Swan Bitcoin.
If you care about your financial future, you need to check out a couple of our offerings, including Swan IRA and Swan Private. Swan Private is our white glove concierge service where you get a trusted partner on your Bitcoin journey. We offer all kinds of education and research projects, as well as exclusive events to our Swan Private customers. Check it out today at swan.com/private. Also, Swan IRA. Swan IRA is the best way to gain exposure to real Bitcoin in a tax-advantaged account, like a traditional IRA, a Roth IRA, or rolling over your 401k. So if that interests you, check it out at swan.com/IRA today.
We got two guests for us today. Both work at the intersection of energy and Bitcoin. We got Patti Trompeter from Sphere3D, who's the CEO there. Welcome, Patti. And we have Austin Mitchell, who is the co-founder and CEO of Synota. Welcome to you both. Good morning. It's great to have you on the show.
Good morning. Thanks for having us.
Yeah, great to be here, Sam. Thanks so much. Good morning, Patti.
Morning. How are you, Austin?
Doing good.
Good.
Yeah, so I wanted to have you both on the show. We met in person a few times, and I'm a big fan of both of your work. I thought it might be interesting for our listeners just to hear a little bit of your backstories first. So I'll maybe throw it to you, Patti. We spoke in Miami. I was really fascinated with your backstory. So why don't you tell little folks about how you managed to maybe go from all the way from the Secret Service to working in kind of traditional finance and to somehow becoming a CEO of a Bitcoin mining company.
Yeah, great. So I was the first person in my family to go to university. And so what ended up, and, again, my father was in the government for quite a few years. And I ended up graduating from college and wanted to serve. Went into the service, but at the time, and a lot of people don't know this, the Secret Service was reported up into Treasury, and they were actually originally focused on money and money laundering. So that's where my focus was. And this, I'm older than everybody here. So we had these giant green and white paper, printouts that we had to go through. And I really can't say too much about, what we did, but we were tracking terrorist money at the time. And then, I went over to GE and GE Capital. And, I've always been obsessed with money and the history of money, and not in the way of having it, but just the way it's, the genesis of it. And so I went to GE Capital. I did mergers and acquisitions, and it was my job to go in and, put together an integration plan for the business. And then when GE Capital slowed down, I started doing their corporate turnarounds all the way up into corporate. And, I was lucky enough to work about 2,000 layers down for a gentleman named Jack Welch, who was absolutely amazing, and a great mentor. So, from that standpoint, you learned very quickly to get into a business, figure out what needed to be fixed and turn it around. And so I eventually went out on my own after a short break. And so that's how I wound up at Sphere3D. I sit on the boards of companies and try to turn them around. And Sphere3D wanted to get into Bitcoin mining. It was a new entrant. So I sat on their board. And then eventually they asked me to take over as CEO, which was about a month before all the craziness happened in 2022. So
yeah,
it's been an interesting ride. But it's been a lot of fun. So.
Yeah, well, we're lucky to have experienced people like you working for Bitcoin and helping a Bitcoin mining company like Sphere3D. It's a really interesting story. And so Austin, you also have an interesting background, primarily in energy before pivoting into Synota, what you're doing today. So maybe tell the listeners a little bit about your backstory.
Yeah, so Sam, I began, working in energy actually when I was in undergrad. So I was studying engineering, and one of the professors there was really focused on kind of doing as much as possible sort of outside of the classroom. So I began doing research on energy efficiency, going into people's homes, helping them, save money, finding different ways to reduce drafts and improve sort of the overall setup of their homes. And that really continued me on a path within the energy research space. I went to Carnegie Mellon, where I did a PhD focused on engineering and public policy, and really my thesis was on the Marcellus Shale and the environmental and economic impacts that was having on the region. After that, did a year-long study of methane emissions with the Environmental Defense Fund and 5 natural gas companies. And then it was kind of coming out of that I had sort of a fork in the road where the choice was sort of stay on the NGO sort of environmental side or kind of go into industry. And I went into oil and gas directly, did, pipeline engineering, business development, had an incredible time, working in upstream oil and gas. And that was all out in Pittsburgh. And then after that, I moved to Columbus, Ohio, where I began to work for an energy retail company. I was pretty much their quantitative guy, doing risk and financial analysis to support the trading and the finance departments. And then prior to joining Synota, I spent the last 3 years at a regulated public utility where I led the strategy and risk department. So founded Synota, officially kind of went full time last September when we closed our seed financing round.
Yeah. Well, we'll definitely get back to Synota, but I think maybe if somebody's listening to this isn't familiar with Bitcoin or Bitcoin mining, they'll see somebody who used to work in environmentalism and they'll be like, what? Like, why are you working in Bitcoin now, Bitcoin mining? If you read all the FUD pieces and all the mainstream media, talking about Bitcoin's energy usage, that might be a confusing, conflict there. But we all three of us were in Washington, D.C. a couple months ago at the Bitcoin Policy Institute, and we were educating legislators and policymakers about some of the benefits that Bitcoin mining can bring. And so what do you guys think is the best messages that kind of resonate with people when it comes to Bitcoin mining, kind of combating some of those fallacies around, its negative impact on the environment? Maybe throw it to Patti, and then
it's interesting. So there's a couple things people should take away. First of all, and I just had this conversation with someone who's like, oh, Bitcoin mining, it uses a lot of energy. Well, it actually doesn't. So if you look at global energy and data use, data centers, which is what we're classified as, uses 2 to 3% of the energy globally. So big energy bucket, 2 to 3% is used for data centers. Of that, Bitcoin mining is only 0.27%. And it's the only industry that can literally shut down in 15 minutes and return power to the grid. You can't do that with, a manufacturing, auto manufacturing line. You can't do that with consumer food products, aircraft engines. You can't just shut down a line and say, let's give the power back. So back in, for example, back in December when Texas, the whole grid shut down and they because they had an ice storm, all the miners shut down and said, give it to the house, the homes in the area. Yeah. You can't do that with any other industry. So that's the first thing. The second thing people should know is the infrastructure. And I love this country, absolutely love the country, but our infrastructure is shit. Needs to be, our infrastructure has some challenges. So we need to fix the infrastructure. Bitcoin mining is fixing the infrastructure with regards to the electricity. Electricity can only travel 200 miles. So what you're doing is Bitcoin mining hosting facilities are going out into rural America and putting up substations and securing the grid. So somebody who has, dodgy Wi-Fi out in the middle of, say, Nebraska now all of a sudden has a more stable grid because there's a hosting facility within 200 miles. So, that's the second thing. The third thing is no other industry has spurred so much innovation in renewables than Bitcoin mining. Renewables I think it was, and Austin, correct me, you were at the conference too. I think in 2020 or 2019, there were close to 1,000 or 2,000 projects in renewables for wind and solar. And I'm 100% probably got that number wrong within, 20%. But at the end of 2022, I heard a statistic that there were 8,111 projects centered around wind and solar, renewables.
Wow.
So and that's the spur of Bitcoin hosting and miners. Everybody's very, integrated in that. And it spurred a lot of innovation. Later I know you're going to talk about Austin's product, but, the use cases for what he's building, he and I had a glass of wine and I was spewing, use cases, which he probably had already thought of already. But, I was like, you could do this with it. And he's like, yeah, I know. But he was very polite, entertaining with that. So
it was more than one glass of wine, Patti. Well, Patty's absolutely right. I think the thing that I'll just pick up on is the innovation side. And having been in the energy industry, what was really interesting for me to observe with Bitcoin mining when I really started to kind of dig into it in early 2021 was, there was a lot of things that the energy industry was talking about wanting to be doing in terms of, building a smart grid, more flexible load, more responsive demand, integration of more renewables. These are all the things that we knew we wanted to do, but they were always kind of on the horizon, waiting for that next sort of technology to come along to enable this. And what I saw in Bitcoin mining in early 2021 was that they just started doing it. They started moving to where they could, arbitrage energy both geographically, across space and time. And I think it's sort of that de-risk by doing attitude that I'm going to just go out there and I'm going to start to force this innovation. There's really nobody out there in the energy industry or consumers that was demanding a real-time price, demanding to be able to access really efficient demand response programs. The good thing is that innovation side is what really attracted me to the space, because it was really amazing just to see sort of this industry just jump 10 years ahead and start doing the work. And so I think that it is building a roadmap for the broader energy system. It really is kind of painting that picture of what we can be, what's that vision for the future. And so I think the energy consumption that Bitcoin represents is a really good thing, because we want more energy consumers to behave like Bitcoin miners. We want flexibility on the energy system, that is super flexible like miners, but everybody to, all the different consumers to be able to have their own levers to pull, when the grid needs it, but also to be able to consume energy when, there's excess available.
Yeah, agree. And just to build on what you're saying, Austin, is we are so far behind in renewables and renewable, right? I don't want to say regulation, but we're so far behind as a country that young kids are looking at us going, let me go. Here's a perfect example. Like, you've got the younger generation that really is craving, innovation and moving forward in this, and we are just not the place. As an example, my son wants to study renewable engineering. So he actually went to Europe to go to university because he's like, there's no program in the US that compares to Europe. So we just need to step it up. Yeah, I know. I lost my baby to Europe, but okay.
Yeah, I remember the American Society for Civil Engineers. They do a report card on America's infrastructure, and we got a C- in terms of all of our bridges, our electrical grid, dams, and roads. We got a C-. So we haven't been investing in it. So Bitcoin represents innovation in our electrical grid, making it more reliable. But when you talk to policymakers, I think they have a lot of people lobbying in their ears. There's a lot of money in the broader crypto ecosystem, talking about proof of stake and, why can't Bitcoin just move to a different consensus mechanism, and it's hard for them to understand. So I was wondering if we could just ask you guys, why is proof of work important to you? in your own words? I think that might be a good question to explore. So maybe throw it to Patti and then
Yeah.
Austin.
I mean, I'm just going to do the very Dr. Seuss version of this.
Yeah.
So I apologize if it's very simplistic.
No,
But
that's
if
good.
you look at proof of stake, it goes exactly against the ethos of Bitcoin. Bitcoin is, I heard this meme the other day, fiat currency is where the government prints money. Stable coins are where anyone can print money, and Bitcoin is where no one can print money. And so Bitcoin, everybody has a chance to win it. If you look at proof of stake, that really is the folks that have a concentration, right, are staking to go win this. So by nature, you're just creating a very hierarchical structure. So to me, that isn't, that goes against the ethos of Bitcoin. So that's why proof of work, and again, I won't touch on the energy again because that just gets me riled up when people say,
No, we want to rile you up.
don't rile me up. But it's just we were laughing the other day. I was having this conversation with my cousin who's like always bitching at me for Bitcoin mining and stuff. I'm like, your electric car uses more energy than one of my machines. And we had this whole argument, and we were doing calculations, and I don't know if I was right or like not, but literally I convinced him. So
There you go.
it's silly, Then we all yell at the Bitcoin miners, and we all go plug in our electric cars and drive our Teslas.
Yep.
Where's the logic?
Yeah.
I think for me, what resonates the most, especially when I talk to other people, is just talking about this physical connection that proof of work represents. It's not something that you can press a button and create more of. And I think more another way to think about it from my standpoint is really energy being the base layer of the economy. And when you have energy as that critical sort of foundation, now you have your currency built directly on top of that. I think you start to think about sort of your economy in layers, and so it makes sense. And when you actually, the thing that really attracted me to Bitcoin mining, as I already mentioned, is that innovation that it represented. But it's also the innovation in the incentive model that's then directly linked to it. So you can't have all the other aspects and all the other incentives of Bitcoin if you then break the link to energy itself. And so for me, it's essential to have that full circular incentive model where everything ties and works together. And so I also think the other thing too, Sam, that's interesting is there's the technology fundamentally that Synota is building has, is not, we're solving a problem that is not, has been known for a long time. And there have been a number of startups, over the last 5 to 7 years that have wanted to build what we're building on other blockchains, leveraging this easy smart contract functionality, et cetera, that those other blockchains offer. But frankly, what they're doing is they're asking people to trade energy for a token that has no basis in proof of work. And so energy has the ability to do work. You will only trade energy for something that was based in proof of work. And so I think fundamentally that's how we differentiate ourselves.
Yeah, it's well said. And, when there's no cost to create these other tokens and they're centralized, you can't cheat energy, I guess is what I'm trying to say. You can't cheat work. And so having that as the rule of the universe kind of underlying everything in terms of the laws of thermodynamics, to me, that's always been an attractive component of work compared to other consensus mechanisms out there. And, one of the big stories of 2021 was when China banned Bitcoin mining, and there was this huge hash rate migration over to the United States. And I think that was a good thing for Bitcoin. It helped kind of decentralize hash rate a little bit more. Back then, there was a lot of FUD around China controlling Bitcoin, and now that's no longer the case. But it has put some stress on these states and some of these grids. They had all this load kind of come in at once. They're like, hey, we want to plug in. And all these states have taken different approaches when it comes to whether they embrace Bitcoin mining, whether they don't, whether they, certain tax incentives. And so when you guys look at the regulatory, scene when it comes to state, what are you liking how some states are approaching it? What are you disliking? How do you think states should look at Bitcoin mining as an industry from a state-to-state basis? Like, what are you guys seeing over there? Maybe throw it to Patti.
Yeah, so there's a couple of states who've obviously done a great job. Cynthia Loomis, Wyoming, she's written a bill, for regulation. She has really made her state one of the forefronts. Same with Texas. They understand the value of it. They understand, the infrastructure of this huge, huge state is being built by the Bitcoin miners. So I think those are states that have done really well. New York, they're banning it. We go back to New York has 110 data centers, and one of the largest data centers in the world is there. It's the one that crunches the consensus numbers.
Mm-hmm.
So, to me, I think some of the states are doing really great. They're pushing forward the regulation. They understand the Bitcoin miners. They work with us. Texas has done a great job, as Austin mentioned, on the demand response. I think there are some states that are very enlightened. It's just there's a big fear of Bitcoin, and I understand that. We were all scared to go off the gold standard and, walk around with these sheets of paper that had, printed money. So, and, everybody was scared of that, and everybody was thinking about killing trees. And so this is the latest. This is the natural progression, is Bitcoin mining. So back to the states, I think some of the states are enlightened and they get that digital assets are the next step, right? We went from shells to salt to carrying around chunks of gold to carrying around heavy coins. And then now we're paper, and everybody went bananas when we were carrying paper. Now digital assets. So let's all just do the hype and bananas. And then there's some states that are just, Texas, Wyoming, I get it,
Yeah.
So, I don't know.
Yeah.
It definitely, there's obviously a broad mix out there, and what I'll say is, for me, there's two things that I really look for. Is number one, just the state that has, really aspires to level the playing field. I don't think Bitcoin mining is, or our industry specifically, is looking for any special treatment. It's just to not be treated differently, or have barriers put in the way of doing business. I think the other thing too, and kind of tying it to energy, is energy deregulation. So there's, I don't know the exact number of states, but it's about half the country, give or take, is served in a or the state provides some amount of deregulated energy supply. And I think what you're seeing is that's where Bitcoin mining is generally thriving today, are in the states where that is in place. It encourages competition, it encourages free market type approaches to energy. And so I think that there's always a sort of a tug of war within all of the states as to what is the sort of the right type of energy policy to have in place. And even in Ohio, which is one of the first states to deregulate, every so often there's a push to then re-regulate from the utilities and from other interest groups. And so that would be a huge step backward for the consumer, for innovation. And so I really think that we need to keep leaning into the benefits of deregulation, having utilities focus on pipes and wires, and then letting energy producers kind of do their thing and just leverage the infrastructure.
Absolutely.
Yeah, I think what you said was important. Like, we just don't want to be treated differently than any other data center. And it reminds me of the Arkansas bill that was recently proposed, where they just said, hey, Bitcoin miners are just data centers, and we want to embrace them, and we want to bring in those jobs, bring in that innovation, and bring in all the benefits that we mentioned to our energy grid. And that's how Arkansas approached it. And I was like, that's right. That's right. They shouldn't be discriminated against, and the government shouldn't be telling people or businesses how to use electricity. That's a slippery slope. And, I was talking to an individual at an ASIC manufacturer, and he was saying how when we think about Bitcoin mining in the coming years, we're kind of approaching the limitations of Moore's law when it comes to the chips. Mm-hmm. And he says, well, it's going to become more and more that these mining companies are going to they're going to have to get creative. They're going to have to get, operationally more efficient to remain competitive. And I was wondering if maybe what are some ways that miners can become more operationally efficient and get an advantage over their competition. I know there's all kinds of technologies out there and innovations that miners are starting to do. So I was wondering if you guys have any thoughts on that.
Yeah, I can talk just really briefly, I think, and I'll let Austin handle the technology, because obviously chips and getting the improvement in chips are always going to be a big technological jump.
Yep.
But with operational efficiency, obviously there's firmware that makes your miners work much more efficiently. And then if you look at operations, I feel that the next few things that are coming down the pike, and I have to be careful the way I say this, are, you start talking, there's going to be less of a need for bodies on the ground monitoring things as AI starts to as we start developing products. And one of the things I love is, for a miner, for a Bitcoin miner, the billing process is really inefficient. So at the beginning of the month, you prepay a bill that you think you're going to use during the month. And at the end of the month, there's like this whole reconciliation that's completely fakaked, and they send you the bill and it's crazy. For me, I have this hockey stick, cash flow. So nothing at the beginning of the month because you're paying it all out to, your hosting facilities, and then your backup, build up your Bitcoin balance. And it's just a bunch of ski hills. Austin has a great product that he's supposed to be finishing for me, which I'm still waiting for on June 12th. Austin, just not, to throw any shade at you, but you did say that. So sorry, I have to give you crap. But anyway, Austin has a great product that's going to, kind of smooth my cash flows. So I'll toss it over to you. But to me, that's operational efficiency, because I'm not, managing my treasury function in this crazy, this crazy manner. But Austin,
Yeah.
and
Yeah,
then you
Austin.
explain your product.
I love it, Patti. I love it. Listen,
I haven't it yet.
I'm gonna send this over to your your counterparty, and hopefully we can move some things forward there. We are ready for you.
On him too. So.
So yeah, I love that Patti kind of brought up what we're doing at Synota, which is obviously which is really about enabling Bitcoin miners to leverage the Lightning Network to ultimately settle their energy contracts with the hosting companies, with their energy suppliers, and really any of their other counterparties. And so certainly, one of the ways that you can think about efficiency, it's back office efficiency. It's how much time are you spending, generating bills, validating the data, et cetera. It's also capital efficiency. So if your cash flow is very lumpy, like Patti described, you may be having to borrow money just to post collateral or your deposit, or just to fund operations even. So certainly there's efficiency gains to happen just in the sort of the financial or back office side of things. And that's really where our solution is targeted. But I'd also highlight that you have, as Patti mentioned, firmware and innovation there. What ultimately is going to continue to sort of move Bitcoin mining further into value creation within the energy system is to be more responsive, to have different modes of operation based on the grid conditions and based on other variables out there. So you're looking at that, and then I think there's also sort of a financial optimization, both in terms of being very tightly coupled between the energy inputs, the cost, what is driving your cost, but also then knowing the revenue. And so of course we're seeing that where Bitcoin mining is getting much more real-time view into their economics, but that's going to be an area where there still is opportunity to sort of push that forward, where it's really down to the minute to know, should I be mining now or should I not be mining now based on my input costs. And then further, as you go from the other point on the financial side, is as you go into the future, it's really kind of taking a page out of other commodity books, but it's the hedging products and things like that to help further just sort of manage risk, think long term about your revenue sources and providing some stability there. So you can hedge energy, you can hedge hash rate, and you can hedge Bitcoin. And so those are all those products exist to varying degrees of maturity, but when you factor in all those things, it's a playbook that you can rewind the clock maybe 20 years in the energy industry, and that's what folks were doing then. And it's a never-ending process because technology continues to move. But as you said, hey, one of those frontiers being the chips is becoming less of a place of innovation. over time, but there will still be other areas where we can innovate. And I think that's going to be really neat to see those other ones sort of pick up, because the other aspect I'll just say is, in energy, it was sort of thought 20 years ago that there really wasn't a whole lot of innovation, left to be had. And then we, got horizontal drilling and hydraulic fracturing, and it completely changed the game. So I think you have to always be thinking about what could be next, in all these different areas that can truly sort of create step changes in the mining industry.
Well, and I think you're right, because I think, just to go back to your point about the operational efficiency. So, we have someone who does nothing but reconcile the bills, right, each month. And so, you automate that, you can get rid of that. You automate, pool monitor, you automate the switching of pools. You don't have someone that has to do that. I've seen a few products that are automating, demand response. Where am I mining? Where am I not mining? Should I be, switch over and mine something else at this point? So, I think from that standpoint, the more we automate, the less you need bodies on the ground. And so, and like you said, there's all the derivative products that are coming out now that are just, the great thing about Bitcoin is you can use all of the, financial products and derivatives that exist for FX and also for commodities. So it's a hybrid, and there's just thousands of them out there. So, you start getting into, no touch derivatives, single touch, that type of thing. So,
yeah. All good responses. And, Austin, I think probably a good time just to back up a little bit and just explain what is Synota. What is the company that you're building right now? Because I think it's really a great use case, not just for Bitcoin miners, but for the energy system as a whole, and then also for scaling the Lightning Network. Mm-hmm. And so maybe you can just back up a little bit and just give the Synota 101 for our listeners if they're not familiar.
Yeah, so when you think about Synota, I think I'll start at a high level and say, hey, when molecules and electrons are being delivered to you as a consumer, that's value being delivered to you in one direction. And then there's also other value streams within the energy industry. So there's the actual payment being made, there's the data around how you've consumed energy, and then there's the environmental attributes. So you can kind of think of, in the energy industry, there's really 4 value streams today. And what's really interesting is they're all disconnected. The data is separate from the money, which is separate from the environmental attributes, which is separate from the molecules and electrons. And it's in that disconnect of value that we are seeing, we've lived with tons of inefficiencies for a very long time. The easiest disconnect is just to think about the time disconnect between when you consume energy and when you pay for it. So fundamentally, that's where Synota is focused today. And so what we're doing is we're leveraging the Lightning Network to enable the synchronous flow of value in terms of the energy and in terms of the payment for it. So now, as you consume energy, you can pay for it. And ultimately, the solution provides flexibility to say, hey, you can be basically go anywhere from streaming sats for energy to a daily settlement of a contract, or weekly or monthly even. So it doesn't have to be that you're sort of stuck in one paradigm of operating, but it's the flexibility to choose, and then it's the ability then for you as a consumer to get a price that reflects your usage, to get a price that reflects how you're paying for the energy, etc. And so all of those things really represent sort of fundamental unlocks of the energy industry today, because in a system that is entirely credit based today, what happens is capital is forced to the sidelines. What happens is that all of the richness of the information around how you're using energy is just sort of thrown to the wayside because it's difficult to put onto a bill. So now we get to sort of remove all of that clutter from the equation, and now just sort of create these frictionless, seamless transactions for energy. And so what that's going to enable for a Bitcoin miner especially, and that's where we're focused initially, is a Bitcoin miner to now pay for their energy that they're consuming on a daily basis. Everything about the software is decentralized. Basically we've created a wrapper around a node in the Lightning Network. So every party to a contract gets their Synota node. that node has all of the information there to store their specific data, their contract logic, everything they need for payments. But it's all there for the parties to now set up automatic transactions. So as one is consuming energy, the other can now be paying for it. And so all of the back office touches, the bill reconciliations, now all of that can be fully automated. And by moving to this daily settlement, the biggest thing that we're seeing in response to our conversations with energy suppliers and hosting companies today is they view this as a very positive shift in the risk profile of the Bitcoin miner. They don't have to worry about chasing accounts receivable balances. They don't have to worry about the credit that's building. And so what's happening is these companies are now releasing collateral or deposits back to the Bitcoin miner. So basically giving them cash back that then they can reinvest into expanding their operations, or just borrow less from the markets, whatever the case may be. But really that fundamental first step, getting the Bitcoin mining industry to start transacting on a daily basis or more frequent, that right there is going to really show an entire, because Bitcoin miners are linked up with all of the biggest energy suppliers really, in the US and globally to some extent. What you're going to see is you're going to give them sort of a taste of something those energy companies they've never experienced before, which is good cash flow.
Yeah.
And so that's really what builds this network effect, where if I'm an energy company, I'm going to want this sort of counterparty neutral transaction. I'm going to want good cash flow, and so I'm going to now start to take this product to other large consumers, and eventually it'll work its way down to retail. And so when you think about the size of the energy economy, trillions of dollars of transactions every year, this is a huge opportunity to really grow and expand the Lightning Network. Bitcoin mining alone can do that, but really what we will aim to do is through Bitcoin mining, harden the network, get it to where it can be to now scale into other sectors of the economy.
And I want to touch on something that you said, Austin. For the miners, Sam, the way the process works now with hosting facilities, because the settlement is, you pay at the beginning of the month and there's a true up at the end of the month and whatever else, they require, a month deposit. And some folks need ask for 2 months, 3 months, whatever. We have paid significant deposits to hosting facilities, and that's money that I could use, to purchase more exahash. And in some cases, and I won't mention any names, but there's two hosting companies that went bankrupt. They have, we have significant deposits with them, and we're fighting to get them back. So, now I've got this money that's out there that's at risk, and it's not earning anything. I'm not putting it as exahash. Now there's no need, because you're settling up daily. So there is no AR, right? It's just a daily settlement over the Lightning Network. Much better for me. I probably have, I don't know right now, but like 2, 3, 4, 5 million out there in deposits, just doing nothing. And that's tough. It's tough for someone like myself who's, 1.5 exahash, and, I'm co-located, so I have no choice, but I could easily put that into, exahash. So.
Yeah. So the miners make revenue daily in the Bitcoin that they mine. And these if I've just summarized, these energy suppliers like the solution as well, because they get cash flow. They can get it daily from these miners. That neutralizes the counterparty risk, because they don't have to worry about the miners, not being able to pay back them, or maybe they just don't trust Bitcoin and the volatility there itself. If they get settled daily in dollars or in Bitcoin, if they wanted to, it reduces that counterparty risk. And so then they ask the miners, or they tell the miners, we don't need as much collateral. And that frees up the cash for those miners as well. So it seems like a kind of a win-win. Is that kind of a good summary of what you guys were talking about there?
Yeah. It's a perfect summary. And what I'll add to just really quickly, Sam, is that number one, when you get out of, so a lot of what we've seen is a lot of Excel. So invoices coming out of Excel, being emailed over, not only does that take somebody's time, but that also makes it difficult to scale to do more sophisticated contracts and things like that. So when you use a solution like ours, well, now, sure, let's do 15-minute pricing. Let's do 5-minute pricing. It's all automated on the back end. So where you can now provide more sophisticated products and services as a host, as an energy supplier, and not have to worry about the toll it's going to take on the back office. Same thing from an accounting standpoint. We often get the question, sort of it's conversation number 2 almost uniformly as well. I like this idea of good cash flow, but my accountants are going to hate it. Like there's a lot of invoices they're going to have to deal with now. And what we tell them is that this is complete transformation. We're using the term instant accounting because at the end of the day, it's just like you're at a merchant buying something. We're turning your energy meter into the point of sale.
Yep.
And so in that way, there is actually no invoice that the accountant needs to recognize as a liability on the balance sheet and reconcile later. They just have, if they settle daily, 31 receipts for the month. And receipts don't need to be, entered into the ledger, just the cash. And so it's a much simpler process. We're actually making, even though there's way more many payments, the accounting, the world for the accountant becomes much simpler, instant, very easy.
Yeah, I love it too because it brings miners onto the Lightning Network. So it brings that liquidity into the Lightning Network, which is great for the payment network as a whole, right? The more liquidity, the better. So that's another benefit of this whole project that you're working on, this company that you're building. So it's a fascinating solution. It seems like a win-win all around for the energy suppliers as well as the Bitcoin miners. So keep building that, my friend. And so
coming for you next, Patti. Coming
I
for
know,
you
I'm
next.
super excited if I could just get it. Time's ticking.
Yeah. When we look at the hash rate, all right. So maybe throw this to Patti.
Yeah.
Patti, if you want to speak, just real quick about Sphere3D too. I mean, what you guys are building over there, or what kind of mining company you guys are focused on building there. If people aren't familiar with Sphere3D, I would love to give you a couple minutes just to explain that because, I was reading up about you guys and I liked some of the things that you're building as well.
Yeah. So when China, in 2021, in June of 2021, when China decided they were going to ban Bitcoin mining, we came into a very large contract, which was below market. I think our blended rate was $50.94 per terahash when, the market was at 80 or 90 terahash. So for the longest time, we had an above or a below market contract. About June of last year, we crossed the Rubicon and it became a market contract. We did renegotiate the contract to right size it when the prices fell. So that was great. And we avoided like $60 million worth of penalties, which was amazing. So we're right now, by the end of June, we'll have about 1.2 exahash online, and about second week of July, we should have the remaining we'll be up to 1.5 exahash. And then we're going to focus on building the operations. We're a public company, so I can't say too much, but everything's on the table. We're aware that we need to expand. So we're looking at a few acquisitions. We're looking at some opportunities, I should say, both in Bitcoin mining adjacent opportunities, et cetera. So, and just everything's on the table in the crypto world. So we'll be expanding to kind of ensure that we're not just focused on Bitcoin as we walk into the halvening. We're strengthening the balance sheet. We've got almost no debt on the balance sheet. I think, I could probably pay it off. But it's at such a low rate that it makes no sense. I'm earning more on my Bitcoin than I am on the debt. So, all the miners are paid for. So, we're just mining and, laughing a bit, holding on to the Bitcoin where we can. As part of the contract renegotiation, we ended up getting 12,000 miners all at once. So as you can imagine, between paying the shipping and the duties and the customs and storage, and we had a contract with Core Scientific, and when they went bankrupt, that left a hole in our hosting. So we had to go out and find hosting in the first quarter. We did that. Obviously, you've got to pay those giant deposits because we don't have Austin's system yet. Sorry. A little dig in. We're friends. I should say Austin and I are very good friends. So if I'm not being well, he's being very nice, but he usually digs on me more. So anyway, just so we had to pay millions of dollars in deposits. So unfortunately, our Bitcoin balance declined a little bit, but we're building that back up, and we've got some exciting things on the horizon. So I'm really excited about where we are with it.
So well. just the fact that you don't have debt. I mean, so preparing for that halving should be on every Bitcoin miner's mind, I think, which is coming about a year from now.
Yeah.
And, the issuance is going to get cut in half. And the fact that you don't have debt, though, like I wanted to talk to you a little bit about that because I was, going into this was a different bull market when it came to Bitcoin miners for a couple reasons. One is that we saw a lot of companies go public for the first time. They had access to capital that they'd never had. And a lot of them gorged on this cheap debt and kind of overexpanded in this bull market, thinking that, Bitcoin's price will just keep going up. And then, of course, 2022 happened. And that's not what happened, right? Bitcoin's price crashed. A lot of these companies had a ton of debt on their balance sheets. And I was just wanted to ask, like, what do you think the industry has learned from, that whole cycle? How do you think the industry is going to change from that? Or how have they become more resilient from that? Like, what are the lessons do you think that these miners have taken away from kind of getting punched in the stomach a little bit during this bear market, at least some of them?
Yeah, I think what, the miners have learned is we've watched some, giant powerhouses file for Chapter 11. And,
Mm-hmm.
the people just got over their skis. They decided, I'm going to grow as much as I possibly can, and I'm going to take on billions of dollars of debt, not thinking, and some of them were Bitcoin based loans. Well, the principle of the loan doesn't change, but now, instead of using one Bitcoin or two Bitcoins to make your payment, now you're using five. And so I think folks didn't realize that. They just got over their skis. And I think that's one of the things that we've learned, like, conservative growth. So that's the first thing. The other thing is, there were huge write-offs at year end in mining equipment. If you look at where mining equipment was 2 years ago, so or look at April of 22, it was 65 a terahash, for a S19J Pro. It's now 11, 12, $13 a terahash. So that's a huge amount, of asset devaluation that everybody took on their balance sheets at year end. I mean, ourselves, we took a giant hit, not as large as some of the bigger guys, but, some people put machines on at, $10,000 a machine. And, a year later, they're worth 1,100. So you can imagine that affected folks. And I think now with the prices where they are, it's the smart time to buy. Like there's a lot of folks, you just saw Clean Spark. I mean, brilliant. They just bought a giant amount of exahash at the bottom of the market, so I think we've learned, to watch the prices. We know what happens to Bitcoin, 6 months, 7 months after the halving, Bitcoin takes off. We know that. We can overlay the graphs of the crypto winters, and it's the same path. It's the same lines, just a little bit adjusted. So I think we know up until the halving, you've got to hold everything you can and hunker down and, just cut expenses for, 6 to 8 months after the halving. And then, when Bitcoin takes off, you're golden. So I think we know what to do. I think sometimes we just get over our skis and think, well, let me just build this great big, mammoth organization. And so we aren't doing that. We're doing conservative growth, resisting putting debt on the balance sheet when possible.
Yeah.
So
that's very much the Bitcoin ethos a little bit there too, thinking long term. It's the tortoise and the hare when you compare Bitcoin to these other cryptocurrencies, and we want sustainable growth, and maybe these Bitcoin miners can really take the Bitcoin ethos to heart a little bit more.
Exactly. I mean, it's everything you learned as a kid, right? Like, don't spend more than you make, right? Don't go out and buy a Ferrari if you can only afford a Ford Focus. So
yeah, exactly. I was wondering, the hash rate, this is we're going to be speculating a little bit here, but the hash rate has gone straight up basically the last year or so. Recently it's touched another all-time high. It's about 387 exahash per second. The network is getting more secure, which is a good thing. But I was wondering if either of you guys had theories about where this hash rate's coming from. Any kind of speculation around where it's coming from at all? Like, I would love to hear your guys' thoughts.
Are we not allowed to say it's the rainy season in China, so the hydropower is
No, you could totally say that. Yeah.
the worst kept secret in the industry? China's not.
Yeah. Yeah.
Sorry, I'm probably, if I wind up dead, you guys know why. Yeah, but I think
There could
honestly,
be many reasons, Patti. I don't
there's a long list of folks that just want my head. I know.
know.
Yeah.
Few ex-boyfriends in there too, but that's fine. No, just kidding, just kidding. But oh, seriousness. I mean, I think a lot of folks are bringing on exahash. I mean, Marathon, Clean Spark. There's a lot of exahash coming on because the miners are cheap. And listen, if I liked debt, if I were, I'd go buy 5 exahash and throw it online right now. But I'm kind of debt adverse. So I think you're seeing a lot of exahash come online. I think you're seeing, some of the miners that were rehomed and have been put out into other countries are coming online. There's additional exahash being purchased and brought online in other countries. So I'll leave it
Yeah.
at that.
Got it.
I don't know, Austin, do you disagree?
No, I don't disagree. I think the only thing I would add is, I've in my time, really being working in Synota, it's never ceased to be amazed at the sort of the go forward attitude that this industry has. And when we talk with folks, it's rare that we talk to somebody who's sort of, hey, I'm good where I'm at. Everybody's got sort of an expansion mindset, and thinking about where that next opportunity can be, whether it's more efficient machines or cheaper power, bigger facilities, et cetera. So I've yet to see folks who are not thinking along those lines, and I do, just from the conversations we're having, seeing greater interest, in some emerging markets, where there's cheap and abundant power available.
Gotcha. Well, I just want to end with like a 2 rapid fire questions, if you guys don't mind. Just take 30 seconds. I wanted to ask you, maybe throw it to Patti first. How does Bitcoin make you feel about the future?
Hopeful, really hopeful. And I'll give you a scenario. I think it's the next progression. I think it equalizes the wealth gap. I think people don't really realize the power of it. I had a situation where one of my kids needed money very quickly to put down a deposit. I won't say which one because he'll kill me. But and it was like, I got to pay this bill and I got to pay it now, and it's a large bill, and I couldn't do a wire because it wouldn't get there for 3 days. And I said, no problem. Let me send you Bitcoin, cash it out, put it in your wallet. Done. And I think people don't understand the power of sending money to someone, say in another country, to really, without all of the fees, right? Quickly, boom, you're done. So that just makes it, the possibilities of what you can do with this and these digital assets just really makes me hopeful. Everything from fixing the infrastructure, the renewables, product innovation, like what Austin's supposed to get me in the next few weeks. And, just the general opportunities of the various financial instruments that can come out of this. I mean, I'm very hopeful. It's, it's the next step. It's the next generation. So,
Yeah.
I'm
What about you, Austin? How does Bitcoin make you feel about the future?
I'm in lockstep with Patti on this one. It is really just about the hope that's created when you think about what people are building today and how positively industries are going to transform as Bitcoin adoption continues to grow. And I think the other thing too that just sort of we all can keep we all hold dear, but I think is super important is sort of just the general ethos and the privacy applications as well that can be enabled by Bitcoin. I think in today's day and age that you can't undervalue that enough to be able to have something that enables us to not sort of have to reveal everything all the time when we want to do business with people or transact with a friend. So all those things can make me extremely hopeful.
Yeah. Last question. Throw it to Austin. What's the next big thing Bitcoin will fix?
All right, well, we're going to fix energy
Yeah, there you go.
first. So that is next. But I do think that there's, something that what I'll say is transactions are broken in many industries today. And one of the ones that Patti and I agree with is healthcare, where there is, the more that, I've always had some exposure to the healthcare space, through my family, et cetera. But, as I've gotten to learn about it, folks coming to us to want to talk about it, it really is, an area where you can create so much, better transparency, such a better customer experience, drive out inefficiencies. And so if I were to say, what's next after energy, I'd go to healthcare as where Bitcoin technology can really, um, you know, bring massive amounts of efficiency that ultimately result in, better patient care for a lower
Mm.
cost.
Yeah, Patti, what about you? What's the next big thing that Bitcoin will fix?
I think it's going to fix the payment systems. And, everybody's so excited with this Fed now. And I know I'm going to get a call later from all my friends who work at the Fed telling me what a bitch I am. But like all Fed now does is bring us on par with like Canada and the rest of the world. Like, you can send a wire in a day, like the rest of the world. So I think it's going to fix the payment systems. If you look at how inefficient, and medical is part of that, how inefficient all of the billing and the payment systems are in the US, and the inaccuracies that everybody gets on their bills. I think Bitcoin is just going to take all of that away. So instantaneously.
I have to agree. Uh, well, this was a fantastic conversation. Thanks, guys, for joining the show. Patti, Austin, where can people find your work, or maybe learn more about the companies that you guys are building today?
Sphere3D.com. So
Okay.
Yeah, Sam,
Awesome.
you can go to Synota, synota.io. And pretty soon you'll be able to go to one of Patti's facilities and see us too.
that's what I
Um,
want to hear, Austin. That's what I've been waiting to hear.
let's talk after this, Patti. Let's get it going.
Okay,
Um,
I'm on
yeah,
it.
we're out there, Sam. I'm on Twitter, of course, and we welcome people reaching out to us who are in the space if they have questions about what we're doing, how we're doing it. We've kind of built intentionally from the start as an open book, and we're excited about the growth that we see in front of us, and welcome folks to reach out if they want to join.
Yeah, I'd point people towards your presentation at MicroStrategy World 2023 too. I'm pretty sure you can find that online. Austin gave a great presentation on Synota and some of the problems that it solves. So go watch that video too. Maybe we'll put it in the show notes.
Cool.
But thanks again, guys, for joining. Really, really appreciate you guys taking the time, and just have a wonderful day and keep building.
Thanks,
Sounds
Sam.
great.
Thanks for having me.
If you care about your financial future, you need to check out a couple of our offerings, including Swan IRA and Swan Private. Swan Private is our white glove concierge service where you get a trusted partner on your Bitcoin journey. We offer all kinds of education and research projects, as well as exclusive events to our Swan Private customers. Check it out today at swan.com/private. Also, Swan IRA. Swan IRA is the best way to gain exposure to real Bitcoin in a tax-advantaged account, like a traditional IRA, a Roth IRA, or rolling over your 401k. So if that interests you, check it out at swan.com/IRA today.